Welcome to the November 5th, 2018 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group, and your financial weatherman with a fast-paced tour each and every week right here on YouTube. Be sure to subscribe and you will get market alerts when there are big events in the financial markets. And October was a big event. It was a smackdown for tech and the indexes. Dow Jones Industrial Average after the smackdown of October. We're coming through the end of the week here, up about 3% for the year. That had been a 10% number up here, but the sector leadership appears to have changed dramatically, and we're going to cover some clues on what that may be. Let's do a little intelligence on the S&P 500. Here again, we're looking at a 2-year graph, but a year-to-date performance, 3% on the S&P, similar to the Dow. What's this graph? This is reflecting that the technology was the major source of the gain, and after the October smackdown, most of the market is actually down for the year. The index, without just a handful of tech stocks, would be down approximately 5%. The tech leadership could be over, and we have a triangulation on where that could go. On the last trading day of this week, we saw ExxonMobil spike 2% by beating earnings 20% in the energy sector. And at the same time, Apple reported reasonable results, but slowing growth and got smacked down in pre-market trading as low as 10%. A shift in sectors tends to make sense, and we'll cover more details on this weekend's program. Now we come to bonds. If you bought the long government securities fund in the 401k thinking that government bonds are always safe, duration risk has caused that price to drop 8.5%, and the yield is still about 3%. This is the 20-year Treasury price chart. You can see the impact of the rate spike. If there is going to be a future inflation, where do we go, and what's the Fed going to do? So let's take a quick look here. This is the 30-year U.S. Treasury spiking to 3.4%. That corresponded to the down in price. Now, we look at what's happened to short-term rates. The Fed has addressed the issue of inflation and maybe crushed the tech bubble, certainly crushed emerging markets and slowed global growth from right there in Washington. 2.3%, about the peak here on the T-bill, anticipating that the Fed will go to 2.25% at the next meeting. It is a probability of 72% that they're going to go to 2.25%. There is not a probability that they'll go any higher, a majority probability, 48% in May, maybe. What that means is the Fed is likely to signal we're going to pause, or we're going to be data-driven, and the relentless pace of short-term increases could take cash flow assets paying more than 6%, a huge margin over the Treasury, could take those assets up in a price rally that reflects the fact that discounts now prevail. What other sector is discounted? Well, ExxonMobil gave us a key. This is energy infrastructure, the colorful graph, versus the burnt orange oil. There's the low of 27. Percentage change since that low. You can see the correlation here. The pipeline's catching up on the way down to $27 barrel oil at the end of 2015, early 2016. Look at how oil is rallied, and the pipelines have stabilized, but they are also about 130% behind the rally in oil prices. This weekend's extended interview at NetWorthRadio.com will cover an expert who used to work for T. Boone Pickens, by the way, Brad Olson, joining us. Be sure to go to NetWorthRadio.com. That interview could highlight a great category that's also inflation friendly with high cash flow, and at the same time, discounts in global high yield will be a discussion on this week's program. Both categories are not without price risk, but highly attractive current yields. I'm Spencer McGowan. Please be sure to tune in each and every week right here on YouTube, and when you subscribe, you'll get reports when the markets have fast-breaking events. Thank you for joining us. Our McGowan Group Asset Management sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at networthradio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of networthradio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.